5 real estate investment trends to look out for in 2023. People invest in rental properties for many reasons, such as rental income, property validation appreciation, inflation hedge, tax benefits, and investment diversification. It's not all doom and gloom out there. I'm pumped about 2023. Just got to see the forest through the trees, ladies and gentlemen. The real estate industry is moving beyond what it perceives as cyclical headwinds, i.e., the rising interest rates. And I think people are taking a long-term approach to real estate assets from the conversations I'm having in conference calls and boots on the ground. So the real estate market is currently experiencing a lot of turbulence. We're experiencing some turbulence here. So going into 2023, you have to navigate a lot of things right now. You have to navigate the rising interest rates, inflation, declining gross domestic product, GDP, sinking deal flows, cap, CAP, and property rates, the amount of expected return on your investments. So ideally, you want to have a cap close to about 10% from my learnings and investing for maximum return on your investment. However, in the latter part of 2022, the cap curtailed closer to 6.2%. And now we're in a recession, of course. 10 plus times since World War II, it's always been a recession, 2 consecutive quarters of negative growth. And with the recession, you're going to have job losses. They held off on the job losses for the midterms, didn't want to scare people, but now you got millions of job losses. So if you're planning to begin your foray into the buying investment properties in the next year or intend to add to your existing portfolio of rental units, you'll want to know about some expected trends. And I did some research for you. What can we expect in 2023? And what are they? Where's it going? You got to see the forest through the trees on this and just try and provide some information. So, according to one report, investors purchased a quarter of their residences sold in the U.S. in 2021. It'll be interesting to see how things pan out at the conclusion of 2022 on this front when the fourth quarter closes out. So, what do I think is going to be hot in 2023? Number one, a growing interest in short-term rentals. Yes, I know there's been a curtailment in the latter half of 2022, but in the right market, it is still hot out there, folks. By 2023, in my opinion, short-term rentals are expected to have reestablished their position as a more profitable rental strategy when compared to traditional long-term rentals, in my opinion. You got to be aware when it comes to real estate investing in 2023 is that short-term rentals are more popular than ever. Airbnb's Verbo, Furnish Finder, and other websites specializing in rental options for a few days to a few months are growing in popularity again. And whether, we take stuff offline, word of mouth, but for advertising, we use those websites and set up other websites in other countries. So on the other hand, while long-term rentals aren't necessarily unpopular, they simply aren't trending upwards. The trend lines show short-term rentals are trending faster. So real estate investment, of course, I always preach, try to do it yourself, get a loan, start in your investment journey. If we look at some real estate analytics, closing out 2022, the highest Airbnb occupancy rates in the U.S. market in the summer of 2022, surprisingly, Portland, Oregon, 67.5%, Seattle, Washington was 67.4%, Tucson, Arizona was 67.3%, and San Francisco rounded it out, LA, 66.9%. California, the highest appreciation rate state in the country. Number 2, in 2021, real estate investment trust, REITs was the hottest trend. We also expect this trend to go further in upcoming years. Although 2022, the trend did slow down a little bit. This is still a solid investment vehicle. In my opinion, I've invested in these on a lower end for 2023. REITs work by investing in income-generating real estate assets such as residential homes, apartments, hotels, healthcare organizations, retail stores, and even data centers. I think I did a talk on this. I think this is going to be a great investment vehicle going into 2023. REITs have to distribute at least 90% of the taxable income in dividends according to the law. Even though the pandemic reduced the importance of property early on, especially restaurants and office properties, the future trend, in my opinion, is positive as economies move back to get back on track. But one thing, that you also have to consider is the crime rates in certain cities and office space. I always said the city centers won't die. There'll be some type of hybrid. That's turned out to be true, but you have to look at the crime rates. That's gone up. That needs to be fixed. Number three, I think there's going to be more fractional rental property investing. One trend expected next year is an increase in fractional rental property investing. If you invest, for example, in stocks, you probably know about fractional buying. It's a helpful feature if you want to buy a relatively expensive stock but don't have the financial flexibility to buy it outright. So real estate crowdfunding platforms like um, Fundraise, Reality Mogo, and CrowdStreet have allowed small scale investors to own fractions of residential, commercial, and industrial properties together with other investors. So it's an interesting investment vehicle. You want to do your research on that. Also, companies such as Arrive, Ember, Fintor, as well as Equity Estates are identified as fractional real estate companies, not as crowdfunding platforms. So, the benefits this rental property investing strategy offers are numerous, being affordable, uh, less risky, it's just, passive, uh, I think are most important. As technology continues to advance in real estate, fractional investing is expected to accelerate in 2023, I think, and beyond. So depending on the platform you use, you want to do your research. I've used a few. I had a friend that had some problems with a few others. Just need to do your research. You can usually, buy any size portion of a full stock using fractional investing. Fractional rental property investing works under the same principle. It may be the answer you know, if you can't afford, to take out a loan for hundreds of thousands of dollars to purchase a rental property. It can open up opportunities for you if you want to invest in real estate, but you just can't buy the home outright. So it's a way to get your foot in the door. I said this in another talk. I think it does have value. I like the value proposition of it, and it's something to put some of your net worth into. So the benefits this rental property investing strategy, I think the positives outweigh you know the negatives for sure, and I think it's an avenue you should consider if you don't want to take all the risk yourself and get involved with some other investors. And I think it's an interesting investment vehicle, and I'm going to put a little more cash into it. So number four, more demand for rural properties. It's still there. You got institutional investors like BlackRock buying up single family homes in rural areas, creating a nation of renters. Did a number of talks on that. So you remember the work from home orders in place early on, not too long ago. The authorities wanted to slow down the spread. How did that work out for you? The coronavirus didn't work out too well, did it? And they requested that businesses allow workers to work from home. Many people working from home and were no longer commuting. Uh, you know, After a year, they decided to relocate to areas, and that happened in Mexico, for example. Countries outside, people liked it. They wanted to stay down there. So you can expect to see greater demand for rural properties in 2023, in my opinion. If you're a new real estate investor, you can often find better deals if you're willing to buy in rural regions of the country. But prices have gone up in some rural areas because of the increased demand from individual small investors to institutional investors. So depending on the rural area you're focusing on, you can find some reasonable prices for rental property. And like I said, the city centers, I always said they're going to be a hybrid, but you have a lot of things going on right now. You have to look at the laws they're passing and the crime. Number five, technological advancement will make it easier to invest. With the increase of blockchain popularity and considering the dollar's value weakening and inflation rising, digital assets are gaining popularity from mainstream institutions, like e-wallets and lenders, and groups of people who are, benefit best as customers choose, decentralized finances, DEFI over traditional banking institutions, decentralized over centralized, ladies and gentlemen, like Bitcoin. not FTX. With the increased adoption of blockchain, some companies, have even started, as we all know, taking Bitcoin as payments for products. This FTX situation has put some interesting changes in, with the Fed coin and all this stuff going on. But technology, in some respects, is helping to level the playing field for real estate investors across different, socioeconomic categories. You could expect to see, technology making its presence felt even more in 2023. What the Fed is doing, what is going on with crypto and everything else. You can use technology at various phases of the property buying process. For instance, you can use tech to do the following. Uh, you can use technology right now you can buy rental properties. You can rent out properties. You can find properties. Management firms to manage the day-to-day affairs of rental properties. While it's probably best to physically, and I've always said this, I know people have lost their assets on this, you must physically go and see the property you're interested in before pulling the trigger. It's technically possible to not even see the property sight unseen and buy it. I don't recommend that. you know, but you can expect to see more and more investment property buyers leverage the power of tech. In my opinion, technology really is about leveraging the the playing field. And if you live in an expensive part of town, or if your state's real estate prices are higher than average, you can focus on properties in other areas. Using technology to your advantage. You don't necessarily need to be there. That's my key takeaway. You don't need to be there. Uh, it will open up more investment opportunities that you can take advantage of if you're scared to not go outside where you live. So I think final thoughts. Since 2019, the investment market and worldwide economy have experienced many issues. However, with fewer restrictions, investors also came back to the industry. The market also, develops new trends that seem to improve the overall situation in this sector, while also allowing investors to get better results in return on their investments right now. So, like I said, with technology, it just you can set up your vendor pool when you're not in the city where you're trying to buy and things like that. So I think these are just a few trends to be on the lookout for in 2023. If you're interested in buying investment properties, I don't have a crystal ball, but we do have a track record and we do have a pretty solid portfolio. A lot of people don't talk the talk, but they can't walk the walk. You know, uh, it's important you make an informed investment decision, uh, because there's a lot of headwinds to navigate going in 2023. I think we have a pretty good handle on it, what we're doing across the country and outside the country, because we're constantly on calls and talking to people, not just reading articles. And we all know news stations like CNN and even Goldman and Sachs have been wrong. So I read that information and I take that in, and then I compare it to the cities we're looking in and talking to people and investing in, to get a better handle on what's going out there. So, like I said, it's interesting times to be alive. I think 2023, there's going to be great opportunities out there. I think these five um, pose your best deal going forward. But like I said, technology, you can't. I don't recommend buying properties unseen. I just had a conversation with someone about this, and that's why it's on my mind, top of mind right now. But you can use it to your advantage to research the properties, set up your vendor networks and pools, and all these things. So that's where technology is a great thing. But when it's centralized versus decentralized, you think of decentralized Bitcoin, centralized FTX. Look what happened with that. You don't want to buy a centralized coin like that. And how is technology going to play into the real estate sector and all this stuff? So it's interesting. You got to keep an eye on it. A lot of moving parts right now. There's going to be a lot of changes. Take care.